Welcome to the webinar. Thanks for joining. There are still people signing on, so we're going to wait just 1 minute and then we're going to get started. So hang on and we'll be right back. Okay, let's get started. Welcome again. My name is Don Davis. I'm one of the editors at Internet Retailer Magazine, digitalcommerce360.com, and I'll be moderating today's webinar. We'll be talking about the opportunities and challenges of selling internationally via e-commerce. In particular, we'll be discussing advances in fraud prevention and payments processing that makes cross-border e-commerce a bigger opportunity today for retailers than ever before. Explaining those advances and what they mean for retailers are two experts in their field, Brad Stevens of Count and Michael Masasi of BlueSnap. I'm going to let Brad and Michael introduce themselves. Go ahead, Brad.
Sure. Thanks for joining us today. And as Don mentioned, my name is Brad Stevens. In my role, I'm a partner manager here at Count, and I support the BlueSnap team in helping them identify solutions and the challenges that many of the merchants face out there in the marketplace. So there's lots of attempted fraud. I've been with Count for about 9 years now, and through this time, I've had probably thousands of conversations with e-commerce merchants, heard a lot about the challenges they faced. And so my hope today is that you can pull some valuable insight out of these conversations that Mike and I are going to have with you today.
And hi, everyone. This is Michael Masasi from the BlueSnap team. I am Brad's counterpart on partner management at BlueSnap. My role is to help make sure that all BlueSnap customers are getting the most value out of the products and services that are included in the BlueSnap platform. And as we're going to be discussing today, Count is a big part of that. So looking forward to talking with you all about international e-commerce and how to manage fraud.
Okay, thanks, Michael and Brad, and they will be right back. I just want to say that members of the audience can ask questions at any time that come up as we speak using the question box on your screen, and we'll leave time at the end for Brad and Michael to respond to your questions. During the course of our conversation today, we'll be drawing on data and insights from a new white paper on international e-commerce that's just been released. It's the result of a collaboration between Internet Retailer, BlueSnap, and Count, and we'll be sending everybody on today's call a copy of the report after today's webinar. If I had to sum up the report, I'd say we came to 3 main conclusions. First, consumers all over the world are shopping more online, and they're increasingly comfortable crossing borders when they shop on websites. 2, half of leading U.S. online retailers don't accept orders from foreign consumers, which means they're turning away a lot of potential business. And finally, concerns about fraud and payment processing are the 2 main factors holding those retailers back. And most of today's webinar will be taken up with addressing those concerns about fraud prevention and payment processing. So here's the agenda for today's webinar. First, we'll look at the global e-commerce opportunity and retailers' concerns. Then we'll turn to strategies to avoid digital fraud in global markets. Third, we'll discuss how to streamline your payments across borders. And finally, we'll take your questions. So let's begin by looking at the large and growing international e-commerce opportunity. The first point to make is that online shopping is a global phenomenon. It's growing at around 20% a year around the world, while total retail sales are only growing in the low single digits. In fact, e-commerce will account for about 1/6 of worldwide retail sales this year. So across the globe, and not just in North America, consumers are moving more of their purchasing to the web, and that makes it a big opportunity. So before going further, I would like to get a sense of how many of the companies on this call today are taking advantage of the opportunities. So the question is your company shipping to international online shoppers today? If you are, please use the raise hands option on your screen just to answer yes, and we'll report on the answer in a minute. So So this is a big opportunity, but one that many of the leading U.S. online retailers are missing out on. Half of the nearly 900 U.S.-based retailers and internet retailers, top 1,000 ranking of North America's top online retailers, do not ship to consumers outside of North America. And that's despite the fact that consumers all over the world are already shopping on retail websites outside of their own country. In fact, 57% of consumers in Europe shop across borders, 48% in Asia Pacific, and 52% in Latin America. In smaller countries, where there aren't as many domestic online shopping options, cross-border e-commerce is especially common. According to a PayPal study, 84% of consumers in Ireland shop on websites outside of their country, as do 72% in Belgium, 62% in South Africa, and 61% in Australia. So it gives you an idea of where those shoppers are coming from. And we got the results of our first survey, and only 11% of the retailers on the call are taking orders from outside of North America. And that's an indication that probably why you're on this webinar is that you want to learn how to take advantage of the opportunity. Now, I do want to mention that cross-border shopping is not as prevalent in larger markets. For example, only 34% of U.S. online shoppers buy on foreign websites, 38% in the UK. That's because consumers in those countries have a lot of domestic websites to shop on. But I've shopped on other websites in Europe and even in China. So let's do a second poll and find how many of you have shopped on a website in another country. Answer yes using that raise hands tool. Answer yes if you have personally shopped on a retail website in another country. And I'll give the results of that in a minute. So we've seen that many U.S. retailers are sitting on the sidelines. At the same time, some big players are more than happy to scoop up all this international business. According to International Post Corporation, which is a consortium of 24 national postal services, Amazon accounted for 23% of cross-border online purchases last year, followed by Alibaba, mainly through its global discount marketplace called AliExpress at 16%, and eBay sites at 14%. Because Amazon, Alibaba, and eBay have been aggressive in expanding internationally, some merchants have concluded that the safest way to go global is by selling on those platforms. And while that can generate sales, many retailers complain about the high fees they pay those platforms, which cut deeply into profits. At the same time, I've interviewed many smaller online retailers that are doing a lot of business selling to consumers abroad through their own websites without relying on those big platforms. In every case, these companies, and I'm talking about small companies selling, maybe only a couple of $1 million a year, but they're able to do this because they're taking advantage of a wide variety of services available today that make cross-border e-commerce manageable and quite profitable. And by the way, it looks like 32% of you have, like me, shopped on websites outside of the United States. So you know that you're comfortable doing it, and so are consumers all over the world willing to increasingly shop internationally. So that just reinforces the value of the opportunity. So the big question is, why aren't more U.S. online retailers selling to international customers from their own websites? To answer that question, internet retailer BlueSnap and Count conducted a survey in the spring of 129 retailers and brands. What we found was that these companies say fraud prevention and payment-related issues are the two biggest obstacles to taking orders from consumers in other countries. Our retailer survey also identified other obstacles to global e-commerce. It takes more sophisticated technology to sell internationally because some systems that work fine domestically aren't adequate when selling globally. And marketing to consumers in the European Union has become more complicated with the enactment of the sweeping privacy protection law known as GDPR and the payments legislation known as PSD2. Retailers selling into Europe will have to become familiar with these new laws or work with providers that know how to comply with them. And Brad and Michael will talk more about those European laws in their remarks. But the main concern that came up repeatedly in our survey were about fraud prevention and payment processing. And to talk about how retailers can address those concerns, I'm going to turn the mic over to my co-presenters, Brad Stevens of Count, Michael Masasi of BlueSnap. I think Brad will go first, so take it away, Brad.
Yeah, thanks, Don. And I guess what I wanted to focus on is Don pointed out that in the survey there was fewer than 50% of the top 1,000 U.S. retailers that are not taking advantage of selling abroad, and I think that's a really surprising statistic. And also, when we looked at the survey, we saw that 60% of those merchants surveyed pointed to localized currencies and payment processing and things like fraud prevention as the biggest obstacles that kept them from selling in these markets. So the point that I wanted to make on the slide is that the risk factors absolutely do look different when you're dealing with international orders and selling cross borders. So there's not only more risk when you're looking at selling cross borders in international locations, but it's also more difficult to identify those good orders from the bad. So you have to have a really sophisticated solution to help you make sense of those good orders from the bad orders. And so, what many merchants rely on is things like the common techniques that the issuing banks have. So things like AVS or address verification, CVV, which is that card verification value on the back of the cards. Those are not really effective solutions. Domestically, they do fairly well, but when you're looking internationally, they're not very effective at all. So one example is that when you take address verification, it's less effective in other areas of the world, where let's say that every resident receives mail at a single address, so things like a post office. So the card's billing address on an international order isn't going to have the same value as it would here domestically in the United States. So that's just one example, and every geography is very unique. So having different geographies are going to have different nuances and different complexities that really need to be taken into consideration when implementing a cross-border fraud strategy. And the other point I wanted to make is that if selling internationally isn't already tough enough, the other challenge is that we as merchants, and even as a fraud solution provider, we have to take into consideration all of the compliances and the regulations, which really further complicate selling in these cross-border locations. So let's look at EU as an example. So things like GDPR, things like PSD2 dictate the type of information that we can collect on the consumer. And so that absolutely has an impact on us as merchants and even us as a fraud solution provider, because when it comes to looking at risk, it's all about data. And so if we're being regulated in the type of information that we can collect on those consumers, it just makes our job even more difficult. So it really does have an impact on us when we're looking at risk assessment, accepting orders, and cross-border locations. And to complicate things even further is that many times merchants, when they're trying to sell international, the only options they can find out there are really going with multiple payment providers. So it means that they're going to have different merchant accounts, different contractual arrangements with different processors. So at this point, let me turn it over to Mike, who on the next slide, he's going to talk about some of those challenges of having multiple payment processors in the marketplace.
Thanks, Brad. Before we move on to the next slide, I really just want to echo the 2 points you made here. First about the nuances on a country-by-country basis when retailers start selling internationally. What we've seen in working with thousands of companies that are selling cross borders, every time a company tries to replicate their domestic payment strategy internationally, they run into challenges. And typically what this means is that they're relying too much on Visa and MasterCard without analyzing the local payment preferences. So things that we in the US would think of alternative payment methods like bank transfers, vouchers, e-wallets other than maybe PayPal and a couple other global options. These are really crucial for international markets. And Brad, you mentioned that some of the fraud tools in the U.S. aren't effective, like AVS and CVV. Just want to call out that those are fraud tools specific to payment cards. And as you start branching out into new countries and new payment methods, those aren't even going to be on the table. So there have to be other technologies deployed for managing risk. And then I think the comment you made on PSD2 and regulations is really very, very timely. There's impacts to privacy, data security, payment security, and fraud prevention. And often these types of regulations add a layer of complexity to all of the 10 items that are on the slide here. So one of the challenges that we try to work with our customers on is complying with these types of regulations in a way that is seamless with their checkout process and is minimizing the disruption as much as possible. So let's head over to the next slide and look at another question that was included in the survey about the number of payment processing relationships. We asked, how many international payment processors do you work with? You can see that there's a range here. The largest bucket, one international processor, but there are certainly some that are using 4 or 5. And I think this is the reaction that many retailers have to the localization issue. They're looking for new payment methods, different technologies for selling into new markets. And the way that's addressed is by adding new payment relationships. So if a US provider only supports credit cards, they might need a European acquirer that supports local bank transfers, or then they add another solution to support more mobile-oriented options like Apple Pay and Google Pay, maybe another solution for invoicing if that's the most common way payments are done in a certain market. And it's really easy to see how these relationships can keep growing and expanding. And then retailers find themselves managing a whole payments technology stack, which they didn't originally set out to do. And then that in turn complicates their whole data management. There's inconsistent data across providers. It's often incomplete from provider to provider. So teams like the finance team are struggling to reconcile deposits from all these different payment providers. The fraud engine is struggling because oftentimes it doesn't have a complete view across all the payment technologies. And another data point from the survey that I thought was really interesting is that 61% of retailers said that managing all of their integrations was an important issue. And that's nearly the same proportion of retailers that indicated having more than one international processor that we see on this slide. So that tells us that integrations can become unmanageable very quickly. So even having one domestic and one international solution is a challenge. And then as you move to 2 or 3 international solutions, it really starts to break down. So this is really the driving force behind the integration of BlueSnap and Count. We wanted to give retailers access to all of the fraud and risk management tools they needed to sell internationally without the overhead that comes with managing all those different vendors. So with that, I'm going to turn it back over to Brad to provide a little bit more information on the benefits that come from having that integrated payments and fraud solution.
Yeah, thanks, Mike. So what I wanted to make a point on this slide is that, the reality is in an ideal world, merchants would like to be able to expand into international markets without the concern of taking on all that additional risk and the increase in overall fraud attempts, but it's really the reality that we're faced with. So through this survey with Internet Retailer, 70% of those merchants stated that integrating fraud solution prevention technologies along with payment processing is critical or extremely critical when selling international. So merchants get it. They're fully aware of the risk, and merchants know that integrating a fraud platform is a necessary component when selling abroad. But acknowledging that a fraud solution is needed is really just the simple part. So the more complicated piece of this is really knowing what solution is best. Because if you look at the marketplace, it's a pretty convoluted marketplace. There's lots of different decisions. I mean, I think at last count, there was probably 18 or so fraud prevention solutions out there. So it's a big decision, right? So there's many different options. And there's other things that need to be taken into consideration as well. So things like development efforts. What does it take to become integrated with this platform? And things like, will this fraud solution allow me to stay in compliance with things that we talked about? So things like GDPR and PSD2. And we're even seeing those compliances come to the States as well. So California's first. I think we're going to see Georgia go next. and I'm sure that'll continue to roll out. So it's something we have to be aware of, and it's a reality of our world as a fraud solution provider and merchants. So point being is it can be a really complex decision for any merchant looking to sell abroad. But the good news in all of this is that we have partnered with BlueSnap, and we have completed a full integration, API integration into BlueSnap's processing platform. So they're a very global company. We're also a very global company, and it means that merchants can now take advantage of BlueSnap's processing and their payment platform services and turn on Count's AI-driven fraud prevention without the need for a secondary integration. So that single API, you can leverage the unique strengths of both companies. And this is a huge benefit when we look at merchants and we talk to merchants, and we know that developer resources are at an all-time high. Like, it's been that way for a long time. There's plenty of things on the roadmap that merchants are looking at doing. And so trying to find resources to complete an integration to a fraud solution provider can be a challenge. And so our partnership with BlueSnap really allows their merchants to very quickly and easily implement a very robust fraud solution, and it removes much of those complexities and risk when they begin to start selling international. So we'll talk more about how we do what we do at Count, but first let me turn it over to Mike at BlueSnap, and he's going to talk a little bit about their overall product offering and how they can help merchants when looking to sell abroad.
Thanks, Brad. So I just wanted to share an example of an engagement that BlueSnap might have with a global retailer. Now we saw that it's the minority of retailers that are selling in multiple different geographies, but when we do engage with them, we see a picture like this that has several different integrations. On the left here, the gateway or the payment processor integrations. They're additive, like I said, as retailers pursue capabilities local to each market. And then there are sort of complementary payment integrations that help round out the solution that could be specific to billing or subscriptions, marketplaces, fraud prevention, of course. So it almost becomes a factorial problem of lining up these different value-added services with payment processors in different regions. So we've designed our platform to help retailers consolidate all of these with a single API and single account to access all of these features and services in the different markets. And on the next slide here, I'll explain a little bit of how we do that. I think we'll start at the top here. Auto onboarding to one account connects retailers to up to 30 global banks. That's really the core of BlueSnap's platform. And that means retailers can quickly access global acquiring services just through one account. And then sort of going around the circle here to the right, we built a ton of functionality on top of that bank network that provides all of the services that you would need to increase revenue as well as manage costs while growing internationally. So one of our biggest advantages is how we leverage that bank network to optimize payment conversions. And we do that in a couple of ways. One is what we call intelligent payment routing. Another is real-time transaction failover. So with that intelligent payment routing, we're evaluating every transaction and routing it to one of the 30 banks we know is most likely to generate an approval for that transaction. So we can A/B test different banks, look at many different variables of the transaction and send it to where it needs to go to get approved. And then we complement that with failover so that if for some reason a transaction does get declined, maybe that's a technical issue at an acquirer or overly tight fraud rules, we fail that over in real time to a second or even a third bank as needed to save that transaction. So that provides some built-in redundancy that we know a lot of retailers are seeking, especially mid-market and larger retailers like redundancy in their payment processing. So we provide that built in without any additional effort from the merchant. And of course, that's completely transparent to the shopper as well. So we do that not just for credit cards, but 100 different payment methods and currencies, settlement in 17 currencies, all from that same account. So really all the tools that you would need to sell globally are in this platform on a single API. And then fraud prevention, risk management are a big part of that, protecting your business as you take advantage of all these features. And for that, we've developed a very close integration with Count. So I'll turn it back over to Brad here to explain sort of the how of Count's platform and what that offers to protect merchants globally.
Yeah, thanks, Mike. So before I start talking about Count and how we do what we do, one of the points I wanted to make is that BlueSnap has integrated our solution in a very unique way. And they have provided a couple of different options for merchants. So it's not a one-size-fits-all. Some merchants may not want full access to all the customization and the capability that what we call Count Enterprise offers. And for maybe those smaller to mid-sized merchants, a way to step into the fraud solution is a more scaled down interface, which is a really good fit because they want to be able to pick and choose from maybe there's a series of thresholds and options that they can pick and choose from. So it's a way for the smaller to mid-sized merchants really get the benefit of a customized fraud solution by selecting from a simplified interface. But then for those enterprise merchants that want to have the full flexibility and customization that Count offers, they have the full-blown interface. Everything that we sell at Count directly is fully integrated into BlueSnap so that merchants can take advantage of that. So just wanted to make that point. And then when speaking of Count, when it comes to fraud, we believe that the basis for making the right decisions for merchants is all about data. So it's all about that big data. And mitigating risk for your business and making those right decisions on your orders does require a solution that really has access to a significant amount of information. And so this information, when we look at it, we believe it needs to encompass more than just your own transaction details. So we know that merchants, when they're using a platform that leverages a global data network, meaning thousands of other merchants using the system, and in our case, there's about 6,500 merchants that are actively using Count today through Count Direct and through our partners. But this means that merchants can now access this global data network, and they have the breadth and the depth of information that's really required to make the right decisions for their companies. So we've been collecting comprehensive data sets globally for over 12 years. We operate in over 190 different countries and territories. Every time we do a risk inquiry, we're really collecting the same type of information on every single transaction. So it just means that merchants that use our system, they can leverage this universal data network to really hone in and get really good at assessing risk and eliminating fraud within their business, and especially when it comes to international orders. So even if it's the very first time that a consumer has landed on your specific web page, there are chances that we've been able to see some of that information or those key attributes that we collect in that risk inquiry. We can look across our global data network and most likely identify some key attributes that allow us to understand the overall riskiness of that individual person. So the way we kind of do this is, again, it all comes to big data, but we deploy artificial intelligence and we deploy machine learning in a couple different ways. So with AI, it is the way that we are accurately and effectively using all of this big data to assess risk in real time on behalf of our merchants. And so the two flavors of AI and machine learning that we use, the first is what's called unsupervised machine learning. You will see other solutions utilize this in the marketplace, but essentially it's using that big data network of other merchants' information to find those hidden attributes in the information. So on the surface, we'll come back and say, it's the very first time you may have seen this computer or this person on your website, but we've seen 12 different credit cards and 15 different email addresses associated with this individual. That absolutely feeds into the overall riskiness. But the second piece of the AI, which is really unique to Count and also being offered through BlueSnap, is that we have what's called supervised machine learning. So supervised machine learning is meant to be the AI piece of your customer service agent. So it's meant to act just like that individual who is at your company reviewing orders. So the way this works is that, we know as merchants, and you've probably seen this if you have many reviews, is that when you hire a brand new customer service agent, that their role and their function is to look at orders and decision whether that's a good order or a bad order. That is more of an art than a science, right? That person has to look at hundreds of orders over a period of maybe 6 months to get really good at identifying what's a good order within your business. So supervised machine learning and AI within Count is really meant to replicate the job function of that agent. So we do that in an automated way. So we use up to 6 months of your historical transaction data and the outcomes that you made there to really train these models and become really good at developing a custom score specifically for your business. So it's meant to really understand the overall DNA of what your good customer looks like. So supervised machine learning is meant to make sure that false positives don't happen within the business. So that, as I talked to hundreds of merchants, especially over the last 12 to 18 months, that is the key thing that I hear. It's all about, well, we know that fraud solutions, you can turn the knobs and dials on them to eliminate chargebacks and fraud within the business. But the big question merchants are asking is, what does that do to my top line revenue? And also, what does that do to my good customer that's getting caught up in the screening process? So we know that there's brand implications of that. Typically, if it's a good consumer that's getting caught up as a false positive, there's other places they can shop to buy the same like product, and they could go elsewhere. So you have to look at the overall, what's the lifetime value of that customer? And so merchants are asking all these questions. That's where supervised machine learning within Count can become really good at making sure those good customers don't get caught up in the overall decisioning process. So we take both flavors of that AI, we feed it into our custom models, and it delivers out what we call OmniScore. So it's a very accurate risk score that merchants can base their decisions on and approve or decline orders in an automated fashion. Everything that we do at Count, so all of the stuff that we do that I talked about happens within 250 milliseconds on average. So it means that our response time happens within the blink of an eye or less than that. And it means that there's zero friction in the checkout process, which everyone, as merchants, we know that adds to fewer orders coming through as merchants. So to sum all this up, we provide merchants with a platform that allows them to really customize a fraud strategy. It allows them to open up the doors and start selling cross-border as if fraud doesn't exist. And it's really allowing merchants to essentially remove the handcuffs. So it allows them to look at where can I go now to sell my products and expand to drive more revenues in a natural fashion. Because merchants, when they go and get into the business of e-commerce, it's not about, let me build a fraud team and let me look at more orders than I'd like to because of fraud. It's all about how do I sell more and how do I drive my business forward and how do I start selling in other locations. So that's what we're here to do, is help merchants do that. So enough said there. Let's, now that we've covered really the BlueSnap payment offering and account fraud offering, let me turn it back over to Mike to talk about the benefits of both.
Great, thanks, Brad. Really, at a high level, having payments and fraud integrated into a single solution, it ensures that your business is protected as it expands internationally, whether that's adding payment methods, sales channels, billing models, and it accelerates your time to market by minimizing IT resources for having that second integration. And Count has been helping protect BlueSnap clients and manage risk for thousands of customers around the world. Some of them are on the slide here, but just wanted to highlight one example of how the integrated solution has helped a recent client that we worked with. We were working with a company that was selling globally, many regions around the world, and they were concerned about their level of chargebacks. That was the KPI that brought to their attention that they needed to review their risk management strategies, their chargeback management strategies, and they were trying to understand what was causing a lot of their chargebacks. And with the combined BlueSnap Count solution, they were able to deploy a strategy that, one, detected fraudulent transactions upfront in real time, in that sub-second response time that Brad mentioned. And then they were able to, in a very nuanced way, blacklist customers that they had confirmed to be friendly fraudsters. So those people that are submitting false chargebacks, false disputes through their issuers, really a problem for many retailers. And they were able to do that in a way that didn't impact customers that had perhaps rightfully submitted chargebacks because of issues with product marketing and fulfillment, which can be a challenge when selling internationally. And their tailored strategy was only possible because of the data that's exchanged between BlueSnap and Count. At the end of the day, every retailer wants to make sure that any fraud solution is only stopping the fraud and not impacting transactions from their known good customers. And having that integrated solution makes it much easier to do that. We're also talking with clients, looking into the future a little bit about what obstacles might come up. 3D Secure is still lingering out there. We thought maybe we'd be getting it behind us, but like most payment regulations, that got kicked out for another 12 to 18 months. So we're still having conversations with a lot of clients about how to approach that, how to be compliant with strong customer authentication using 3D Secure. There's a lot of concern about how that might impact the customer experience, concerns about abandonment and declined payments. But I think it's pretty clear that having a fraud system that's integrated with your payment processor can give you a lot more flexibility in how you implement things like 3D Secure. That will make it a seamless component of your fraud strategy, your compliance strategy. And I know Brad has a lot of good insights on how that can work with 3D Secure. So I'm going to send it back over to you, Brad.
Yeah. So I guess the point that I would make here is just fraud solutions just don't have to be about eliminating those high-risk transactions and keeping fraud outside of your business. The other thing that it needs to be considered is that a fraud solution can really help with the overall optimization of your authorization flow. So what I mean by that is that, as things like strong customer authentication requirements come into play, and as these roll out by the banks, there's ways for your fraud solution to help you avoid strong customer authentication products like 3D Secure. So we all know that 3D Secure, it's part of reality. We will see this become more into play, in certain, especially like in the EU today, but we'll see it in the States. But this does add friction to the overall checkout process, and that's one thing we absolutely want to avoid as merchants, right? Because we want to see higher acceptance of orders and more revenue. So one thing that we can help with is with a fraud solution, we can do the risk assessment in a pre-auth fashion, meaning that we can identify those low-risk transactions and we can identify those high-risk transactions. So for those low-risk transactions, there's things that are called TRA flags or TRA exemptions that are granted by the banks. And they know that if you're using a sophisticated fraud solution, you will be granted these TRA exemptions. So those can be issued for those low-risk transactions, which mean that those transactions can avoid things like 3DS altogether. So we have a way to identify what's high risk, what's low risk. For those high risk ones, yep, let's send those to 3DS. But for those low risk ones, let's let those pass through the system. And that's where the banks are going to issue those TRA exemptions to help with that. So benefits are more than just eliminating fraud, helping me expand internationally, but it's also about how do I optimize my overall authorization flow through my payment processor. So I think that's the last point I wanted to make on that slide. But going to the next slide, speaking about next steps, what I would say is just evaluate your current approach to e-commerce. And do you find that your current strategy is not giving you the confidence to really expand your business in a normal fashion? The ways that you want to expand your business, do you feel like you still have the handcuffs on? There's certain areas you can't sell in because of the higher risk and the attempted fraud. There's ways that we can help you optimize that approach and put together a good strategy that allows you to do that. The other thing I would just say is look at your current fraud metrics. If you're reviewing more than 5% of your orders, if you're a physical good merchant, we can absolutely help you reduce that. So we can bring you down into what our averages are, which is typically around 2 to 4%. Things like chargeback rates. On average, merchants are within count are seeing about a 16 basis point chargeback rate, and they're seeing less than a 2% decline rate. So those are things that you want to look at from a metric standpoint to say, how am I doing and can I do better? When it comes to things like chargebacks though, and chargeback rates, some merchants may have a higher appetite to see a higher chargeback rate. They want to accept as many orders as they can. Maybe that's a physical goods merchant that is okay with running at a 60 basis points. If you're a merchant that's operating very high ticket price, shipping physical goods, maybe you want to be at 10 basis points. So there are ways that we can optimize the platform to hit specifically on your key metrics. So use those as comparisons. Hopefully there's some things we discussed within the presentation today that you find value in. And before I just end it and go to Q&A, Mike, did you have any comments that you wanted to touch on this slide?
Oh, I think your point about looking at the KPIs and letting data drive decisions is a really good one. At BlueSnap, we look at conversion rates. Some people call it authorization rates or authorization success. That can be a key sort of heartbeat on the performance of your e-commerce sales. So we find that a lot of retailers that are still using their domestic solution to sell internationally, now they are having on average 6% of their transactions declined through that provider, and moving to a local or an international solution is a way to get those 6% of sales back converted successfully.
Great. So I think that's it for us, Don. Mike and I have kind of wrapped things up. I know we're going to go into a Q&A session here if there's any questions that the audience has. So I'll let you take things over, Don.
Okay. Well, thank you, Brad and Mike. A lot of information to process there. So now's the time where everybody in the audience can ask their questions. We have a few already in the queue, but there's still time for you to ask any questions you have about Brad and Mike's presentations. Okay, so let's move to the questions that are in the queue. First question, how quickly can the BlueSnap Count solution be implemented? Mike, why don't you start? Maybe Brad will have something to add.
Sure, thanks Don. Yeah, I mean, our APIs are publicly available. People can start coding anytime. We typically find that retailers can get a proof of concept for a new payments integration in a day or so. And the great thing about it is that includes Count's platform, so there's no additional IT or development work to get that integration with Count's platform. And then depending on sort of your level of sophistication, we can work together with Count to tailor a rule strategy for your business. That's more of a business planning discussion than an IT project. So that might be another phone call or two, but it's very easy to get started, and probably within a couple of days have a complete roadmap and everything planned out.
Okay. Brad, anything to add on that?
I don't think so. I think Mike touched on that question perfectly. I mean, it's really easy to get up and running. The only thing I would add in is that there are additional data points that we can consume within the platform. So, some merchants may be interested if they're physical goods and sending shipping information, for example, to be used in business policies. So we know that when it comes to fraud, the bad guys want to give as little time as possible for risk assessment. And so they may do overnight shipping. And so that's one example of what we call a user-defined field that could be sent through our API to consume and use that from a business policy perspective. And there's other things that we can do, but yeah, I think Mike hit it right on super simple to get up and implement it and using Count just because that API integration is fully baked in.
Okay, Brad, here's a question for you that's sort of related. Can account scoring model be customized for each merchant?
Yeah, that's a good question. So it can, and there's a couple different ways that we can do that. Every merchant that uses our platform, and part of the supervised machine learning element, or that AI piece, means that as we look at a merchant's historical decisions, so as they use the platform, as they approve and reject orders, I mentioned before how the system gets really good at identifying what that good customer looks like. That is truly a customized score for the merchant. So as we continue to see those transactions, we do that OmniScore model, and that OmniScore that we deliver back to the merchant is fully customized specifically for each merchant. So that transaction, if it were to happen through a different merchant, may come out to be a different score just because of those historical transactions that we looked at. So it is truly a customized score delivered back to the merchant. We do have some capability to deliver custom models as well. So for large enterprise type merchants that want to see additional data points delivered into the solution to where it truly is a AI-driven custom scoring model specifically for that merchant, we can do that as well. That's an additional product and service that we offer, but it's available and something we could definitely talk about.
Okay, thanks. Here's a question for you, Mike. Do I need local entities to sell globally?
Yeah, that's another great question. We're obviously speak to a lot of the benefits of having that local acquiring for maximizing sales, but actually, retailers don't always need to have operations in the countries that they're selling into to get that benefit. It's, I think, the ideal state that they would, and we often help retailers with that process of setting up local entities to take advantage of local acquiring. But it's not a hard requirement. Depending on your business, what you're selling, who you're selling to, the countries you're selling into, you don't always need to have operations there. So yeah, that's does not need to be one of those barriers to international commerce.
And related question, you mentioned that BlueSnap offers settlement in 17 currencies. What's the benefit of that?
The benefit is if you're a retailer and you do have those operations in different countries and you want to receive settlement to bank accounts in those countries to support your ongoing operations, you can get that from BlueSnap in a single account. So you're maybe processing payments in 10, 12 or more currencies. That's the currency you're charging your customers in, and then receiving settlement in all of those same currencies, up to 17. So you're not paying any conversion fees to convert your settlement into the currency that you need it to be. You're getting it directly into your bank account in your local country in its currency, and having that without any fees attached to it.
Okay, thanks. Next question for Brad. Can Count evaluate non-payment events such as account takeovers and fraudulent new accounts for risk?
Yes. So, traditionally what we're more commonly doing is evaluating the payment transaction, and that can even be, really any type of alternative payment as well. But there are some merchants that do see fraud use cases, I would say more front end, meaning in different areas of their website. So it could be things like logins to where it's a username password. We can definitely work with merchants to help keep the bad guys out from the front side. But then there's also merchants that it's pretty common to see things like new account signup. So why let that fraudulent person even sign up to have access into your environment when you can work with someone like us that can do the same risk assessment on things like a new account signup. So it doesn't, typically new accounts, you don't see any type of payment information, but they're still filling out form field information on that website. So it's, we're collecting things like maybe it's an address, maybe it's an email address. We can still interrogate any device, whether it be a smartphone, Mac, or PC, and pull lots of critical data off the network and off those devices that allow us to assess the overall risk. So yeah, there's ways that we can do things outside of payments, and we're quite commonly doing that. So I appreciate the question there.
Okay, a question for you, Mike. Does BlueSnap offer something that might be of interest to finance companies or banks?
Yeah, definitely. So I think banks are still a trusted provider for a lot of businesses and their payments and of course banking products. But one of the things we found in working with banks is that there are still a lot of old payment solutions and old technology that's being offered, especially for middle market clients. So we've been partnering with a number of banks, working with several already as the preferred international payment solution for their clients. So if there are any banks on the conference call that are looking to upgrade their international payments offering and what they can offer their clients for payment services, we'd love to talk about a partnership.
Okay, well, we're getting near the top of the hour, so we're going to close this webinar. I want to thank Brad Stevens of Count and Michael Masasi of BlueSnap for their comments and excellent presentations. I want to remind everybody on the call to be looking for an email. You'll be getting information on how to obtain a copy of the new report on international e-commerce. So thank you all for attending and have a great day.